Hey there, I'm George and I'm the CEO of UK Financier. And in this video, I'm going to talk about something that a lot of people don't know much about, which is royalty income and how it's taxed. Royalty income can be taxed as part of business income and it can count towards your annual tax. That means that if you receive royalties from books or music, you need to calculate it and declare it as part of your self-assessment. It's important to note that any income that you get from royalties below £1,000 in the tax year for the first time, you don't need to register it, and you don't need to return a tax return basically, for that income at least. If you have other self-employed income that pushes you above that threshold, you would need to still register. If your royalties exceed £1,000, you will need to either register as a sole trader with HMRC, or you can set up a company and run it through corporation tax. Either way, it's important to be aware that royalty incomes are taxed, so you need to ensure that you're basically being compliant with the law as such. Additionally, I guess it's important to be mindful of tax deadlines, and make sure that you always file your taxes on time, and you also need to be aware of how your income is taxed. You will need to pay taxes on earnings from royalties. However, there are things that you should keep in mind again. Remember that you only need to pay tax within a certain tax year, so whether it be 1920 or 1718 or 2021. And it's only on income exceeding 12,500. You can also deduct expenses from your income. So any expenses that arose from the work that you've done, you can deduct it, and you can basically use those expenses to offset some of the tax, if that makes sense. So any expenses that you incurred as writing a book, you can take that off your income, off your taxable income, and then that basically allows you to have a bit more allowance, and you don't get taxed on that. So there's something to be mindful of, which is called the trading allowance, which allows you to write off, I believe, £1,000 from self-employment income, which reduces your taxable profit. So for instance, if you had 1,700 in self-employment income, you can claim a trading allowance, and then your profit will be reduced to 700. The provision is obviously valuable to taxpayers who have a low, I guess, self-employment income, and it can completely almost eliminate your tax liability at that point. But also it's important to note that this is only for self-employed individuals, and it cannot be used to offset business expenses. It can only be used to reduce self-employment income. So always, of course, reach out to your accountant or whoever does your tax, just to be sure that you fall within the lines. It's longer than I wanted it to be, but thank you for listening. If you found anything in here valuable, please share, and yeah, look out for more videos. Thank you.